All right, let's break down Microsoft's latest earnings with real numbers, real quotes, and why the stock still sold off. At a headline level, this was a strong quarter. Microsoft reported revenue of about $81 billion, up 17% year over year. Operating income grew even faster, up over 20%, and earnings per share beat expectations on a GAAP basis. Cloud was the centerpiece. Microsoft Cloud revenue reached roughly $51.5 billion, growing 26% year over year. Azure and other cloud services grew around 39%, which is still elite growth at Microsoft's scale. Commercial demand remained strong, with remaining performance obligations jumping to approximately $625 billion, more than doubling year over year, signaling long-term customer commitments. CEO Satya Nadella summed it up by saying, "We are innovating across our tech stack and helping customers realize the full ROI of AI." So, if the numbers were this good, why did the stock gap down? First, margin pressure. Microsoft explicitly said cloud margins declined. Cloud gross margin fell to about 67%, driven by higher AI-related costs. Management said margins were impacted by continued investments in AI infrastructure and scaling AI services. Translation: AI is driving growth, but it's expensive to run. Second, costs are rising fast. Operating expenses increased meaningfully, led by higher R&D spending for AI compute capacity and talent. Microsoft also recorded gaming-related impairment charges, which weighed on operating income. CFO Amy Hood was direct about this, saying, "We continue to invest to meet demand, particularly across AI infrastructure." That tells investors spending is not slowing anytime soon. Third, earnings quality raised eyebrows. GAAP earnings were significantly boosted by investment gains related to OpenAI, which added roughly $7.6 billion to net income and over $1 per share to EPS. On a non-GAAP basis, stripping that out, earnings growth was still solid, but far less dramatic. In other words, the headline EPS beat looked better than the underlying operating performance. Fourth, not every segment was strong. The more personal computing segment declined about 3% year over year. Within that, Xbox content and services revenue fell roughly 5%. Gaming isn't the core growth engine, but weakness there adds friction when sentiment is already cautious. Now let's get to the most important part: guidance. For the next quarter, Microsoft guided revenue to around $80.6 to $81.8 billion, roughly in line with expectations, not an upside surprise. Azure growth is expected to remain strong, but management made it clear that AI capital expenditures will stay elevated and that margin pressure will continue. Amy Hood reinforced this by saying operating margins are expected to be slightly down year over year as AI investments scale.